Hi and Happy New Year. I think nothing says Happy New Year like data. So let's start the year off looking at data that tells us what the real estate market is doing, plus my educated guess as to what the housing market is going to do in 2022. I actually love data because it tells a very clear story, so let's dive in and take a look at what that data is telling us. My name is Schumann. I'm a realtor here in the Twin Cities, and if you are thinking of buying or selling or just have a question, I would love to hear from you. So my contact information is down below this video in the description box. If you're actually watching on your phone or some other mobile device, tap the title. That's going to pop right open. And in addition to my contact information, there's a bunch of free downloads that you may be interested in, including my relocation guide. Also, since all my videos are all about the Twin Cities communities, what it's like to live in Minnesota, and the real estate market here, I would absolutely love it if you subscribed and hit the bell so that you would get the information that you're looking for every time I post a new video. I really wish that I had a crystal ball so I could tell you what is going to happen in the real estate market in 2022. I don't, but what I do have is numbers, and that's going to give me a really good guess. So in addition to what I think is going to happen and what the market looks like today, I also want to tell you about what kinds of offers have been recently accepted. I really like that information because it is also a gauge for how strong the market is. It shows what sellers expect to see and what buyers are willing to do in order to win. It also can help you if you're thinking about writing an offer to see what other people are doing and how they are actually winning the game. So in 2021, being a buyer or a buyer's agent could feel like pushing a boulder up a really big hill. It was hard, tiring, a little stressful, but it was ultimately satisfying if everyone was able to hang in there. I'm stubborn. I don't quit. The market was really rough for buyers because the demand for homes here is very high and the supply is low. I think many of us went into this winter hoping for a bit of a break on the horizon, but the numbers are not making it look like that will be the case. Inventory of homes was really low last January 1st, historically low. And as of the first week of January this year, we have 15% fewer listings on the market to choose from than we did then. We are still in a ridiculously strong seller's market. Fun fact, the last time the market was considered balanced in the Twin Cities was 10 years ago. And it has favored sellers ever since and doesn't seem to be lightening up at all. As a colleague said today, there is a lot of national press saying that the markets are loosening up and real estate's going to be a little bit better for buyers this year. But the numbers here tell a different story, and it is important to look at the numbers for your market and understand what that means for your situation. So let's look at the data for the Twin Cities. You know that the price is a function of supply and demand, and we have already established that supply is low. Supply of homes has been low for years, and the recent challenges around supply chain and lumber prices are actually not really helping much to correct the new home build and supply issues quickly. It's going to be a long-term process. Realtors look at how many months of supply we have of homes that are available to sell if no other homes are listed in order to determine what kind of market that we are in. 5 to 6 months is considered a balanced market, so that was 10 years ago. Fewer months worth of inventory favor sellers, and the smaller the number of months, the more strongly it favors them, and then of course vice versa for buyers. Currently, the total month supply we have now, including all property types, condos, townhouses, single family, is 0.8 of 1 month. If you break this down further, you see that single family homes are at 0.7 months supply this year. 1 year ago, we had 0.9 of a month. Condos have been the softer spot overall, and currently they are at 1.6 months supply, down significantly from a year ago when we had 2.8 months. Townhomes are behaving exactly like single family homes. They have a 0.7 month supply now versus 0.9 a year ago. If we take a look at pricing, we see that this high demand has pushed prices up over the course of a year. Single family homes are at a median price of $360,000, which is up 10% year over year from $326,300 1 year ago. I want to emphasize that these are median prices for the entire metro area, so city, suburb, all different types of houses, all different areas, and prices range widely. Townhomes are showing a similar increase of 8% from $240,000 a year ago to nearly $260,000 now. And finally, condos, despite being the soft spot, also rose in price. They are at $191,000, up 11.6% from $171,000 a year ago. You have supply, and the other side is demand. So what is causing this high demand? Well, there are a few things I can think of, and at the very top of that list is the low interest rates right now. The Fed is talking about raising them this year, but even if they do, the changes are typically incremental as they test the waters to see how this affects the markets for not just homes, but everything. So if the rates rise a bit to like 4%, will that tamp down the demand for homes? I actually don't think it's going to have an enormous effect. I think it's still going to be a strong seller's market. The demand is just so high and the supply is still so low. So even at 4 or 5%, those are still low interest rates. In the past, I have paid 8.25% for my first home, 6.5% for my second. We got this house for 4%, and we thought we had a steal when we moved into Minnesota. So we did refinance when the rates dropped yet again, so we're below 3%. But you get my point, though. It's relative, and people want a place to live that belongs to them and gives them essentially what I like to think about as rent control or a predictable expense every month, not to mention all the joys of having your own home. The other factor is that there is a very large bubble of millennials that are aging into a time when they want to do the things that people in early adulthood do. Maybe get married or have a family, oftentimes buy a house. So this bubble or boom in the population is driving demand for homes. So if you're thinking of selling, I just want to say right now that your property will likely get scooped up very quickly this year. If you're thinking of jumping into the pool to buy, I have some advice for you. So understand that you're going to be in a difficult situation. You aren't the only one looking at a house, and if you decide to offer on it, you will be competing with many other people. So you really need to do your best and do it right out the gate. You're not going to get a second swing. Number 2, steel yourself for this process. If you don't get the first home you offer on, it's probably going to hurt a little bit. Get back in the saddle and try again. Someone wins every one of these multiple offer situations, and that someone actually can be you. You just need to have the chops to hang in there and keep swinging. If I'm working with you, I'm going to have your back every single step of the way and really help you present your offer in a way that makes the seller say, yep, that's the one I want. Number 3, very important. Look at homes listed under your maximum price. Almost nothing goes for list price right now. So you need to put yourself in a position of being able to offer over list price. Number 4 is a corollary to number 3, and it is that you should save as much cash as possible so that you have the wiggle room to cover appraisal gaps or increase a budget and put a smaller percentage down if you need to. Number 5, lastly, do not stop looking at the times when everyone else has stopped looking. If it's a holiday or 20 below zero in the winter, now is a good time to look because you are competing with fewer buyers, even if the supply is lower too. I actually love to look on holiday weekends. Sign me up on Memorial Day. And I've actually not even had a break over Christmas season this year because listings are selling right now, as well as buyers are able to get homes while everyone else is like hungover from too much eggnog or whatever's going on. So stay in the game and take advantage of the situation. Okay, let's look at what is being accepted right now. What are sellers looking for? What are buyers offering? Home free transaction coordinators. They help us with our contracts and managing transactions. They give us this information and I'm passing it on to you. So the offer acceptance rate that they're seeing is 52%. And what this says to me is that there are still a lot of multiple offers out there. You know, if yours is the only one, it's probably going to get accepted 100% of the time, unless it's bad. Inspections were waived 30% of the time, and this past summer it was over 50%. So if you are someone that really places a lot of value on an inspection, now would be a good time to buy. Pre-MLS or off-market sales are at 4.5% or nearly there. Average purchase to list price is the lowest that I've seen this year, and it's at 100.87%. This was up over 105% last summer. How are people financing? Cash is 19% of the time, and that is the highest that I've seen. And I can say that it actually reflects my own personal experience. Conventional loans are 73%. FHA, still a really tough spot, 2%. VA, higher at 4%. This is the highest I've seen it. And USDA coming in at 1%. One hopeful sign is that sellers are contributing to closing costs about close to 38% of the time. Home warranties being included as part of the sale are at 5.6%. And I help a lot of people that are doing relocation, and this one really stands out to me. So offers contingent on the sale of the buyer's property are down to 6.7%. This is down quite a bit, and I believe like not too long ago that we were seeing close to 12%. So there's hope, but I would still emphasize, try to avoid this one if possible. You want to make your offer as clean as you possibly can. If you're in the process of exploring different communities, I have a playlist that profiles different areas of the metro. It's called my Neighborhoods and Suburbs playlist. So take a look at that and see if you can get some more information that you're looking for. Anyway, thanks for watching and have a great week.